Hello and welcome. You're watching our special series on budget stocks, and today on this edition we will try and find out what could be in the offing for agri stocks, fertilizers and even fuel related stocks in the upcoming budget, and should you truly be looking at these particular stocks and add them to your portfolios right ahead of the union budget. I'm Sakshi Batra and I will welcome our top guest on the show. With us joining in is Mr. Dharmesh Kant, Head of Equity Research at Chola Securities. Warm welcome to you, sir, and thank you so much for taking the time out. Let me straight away go across to our colleague Karishma Sudani at the top of the show to really understand what could we really be expecting as far as the union budget is concerned. We're given to understand, Karishma, that the centre could be looking at increasing both the capex and even the subsidies this time around. Could you break it down for us? What could be expecting this time?
Sakshi, we've learned exclusively from our sources in the finance ministry that government is likely to go for a higher capex, and this could be increased by about close to 5 to 7%. As you know, currently the capex target is at 11.11 lakh crore, and that was already an increase from the 9.5 that they had pegged for the last fiscal year. Now, there is a possibility that government could look up to another 7% hike on this. Besides this, in terms of subsidies, the government had kept a conservative target of about close to 4 lakh crore in the interim budget for FY25, and government may also go for an increase of about 5% on subsidies. We are picking up that government may look at additional allocation towards food and fertilizer subsidy, because in their pre-consultation budget meetings, they've received a lot of requests from industry and union groups to especially look at the food subsidy. They may not go for additional allocation on the LPG side because of their contribution towards the Ujjwala scheme that already exists. Besides this, actually also expect that the government is going to try and keep a momentum on making the private capex also come up. They want more and more industry players to take this up. They're not very happy with the way private capex has turned out, but they're hoping that in the next 8 to 9 months, it will catch the speed.
Okay, got that. So there could be an increase in capex and even welfare spending in the full budget. Thanks a lot, Karishma, for giving us all of those details. And now we are trying to going to be understanding from our guest as to what should be the strategy in case these are the expectations that we have built up right ahead of the budget. Dharmeshji, you heard Karishma talk about, what are our exclusive sources really telling Business Today television with respect to both capex as well as the spending on welfare schemes, or maybe the increase in subsidy, maybe for food, fertilizer and fuel as well coming in. So as a whole, when we are looking at such expectations built up, which are the key sectors that you believe should be on top of the radar of viewers and investors right ahead of the budget?
Yeah, greetings for the day, Sakshi. I think anything less than 10% on the infra spending from the government increase in the budget would not be a good sign for the markets, because infra spending is what drives the overall broader economy, and that is where the focus should be. As far as subsidies are concerned, last time also there was a good increase in the subsidy, both food as well as fertilizer. And this time again, if the talks are about say 5 to 7% kind of an increase, if it is there. So, that's disheartening, because subsidies you give only when the sector itself is not performing well. It's a support, it's a medicinal support for the sector to survive. And that is what our growing economy or developing economy should not be focusing on. It should be like infra spending. It's not a support, but you are actually spending the money out there, creating employment, creating wages and all. But here, the subsidy part is to feed the system so that the present level of income is sustained. So that's a dichotomy between the two. At the same time, I think the picture will become more clearer as to how the contours of the budget is likely to be by say 15th of July. Because June we have seen monsoon has been deficient to a large extent, especially because of central India, northern India and the certain parts of the eastern India, which are basically the food grain bowl of India. So they are facing a severe crisis as far as rains are concerned. And more likely the tilt, if it's more of a rural, social and farmer-oriented kind of a budget with waivers coming into play because of the monsoon not catching up, will be a bit negative for the market. So as far as sectoral plays are concerned, it's very difficult to predict any sectors right now. because the entire window is very wide open.
Okay, understood. So difficult to talk about the key sectors, but let's focus on the subsidy part for now, Dharmeshji. Just like how Karishma pointed out, about a 5% increase in various subsidy allocations through various welfare schemes could be in the offing. Remember, it was in the interim budget that the food subsidy was allocated at 2.05 trillion rupees. This was slightly lower than the previous fiscal year's revised estimate. Even for fertilizers, there has been a lower subsidy on that front too when it compares to the previous year with respect to what was allocated in the interim budget. And also for food, similar tune, there was some kind of a disappointment in the interim budget, but looks like now our sources are telling us that there could be an increase in all the three subsidies per se. Are you bullish on any of the three sectors that we are discussing, fertilizers, food, or even fuel? Which is the sector that you believe is likely to be in the better hands at this point in time, right ahead of the budget?
So I think the first leg of run-up has already been done up. As far as fertilizer sector is concerned, we have seen the prices went up very sharply, and then the GST disappointment came through, which the expectation per se was not should not have been there. But anyways, that is how the trading played out in the fertilizer segment. So one thing to remember about fertilizer is you cannot increase the intake. I mean, the volume growth of fertilizer is very difficult. Only you can increase the quality. And the moment you increase the nutritional capability of fertilizers, again the volume growth gets limited. So it's not that something which can have a compounding growth factor. So it's a limited 5-7% kind of an annualized growth factor which you can see at best. So that's the first limitation of the sector per se. Secondly, you are fitting to the most vulnerable section of society. The pricing can never be at your bargain. You don't have a pricing power out there. And at the same time, you are pushing your product output. So it's more of a trading place. I think the trade pre-budget is already done with the fertilizer space. As far as fuel is concerned, difficult to say because government is making good money out there. The prices are still sub $90 a barrel when the initial price hike started, and it's been there for now almost 2 years out there. So all this tax benefit which the government is enjoying because of higher excise duty being collected out there, they are having their coffers filled up through this. I don't think, since there's no major inflationary concern out there because of say more than 100 rupees a liter of say petrol in a city like Mumbai, it's still being passed on. Inflation is totally controlled, and in the GST meet they did not take up the issue at all to bring it into the GST ambit. So the excise and the state levy of cess and the sales tax still continues out there. It is likely to be so. I don't think anything will come out there on the fuel side. At the same time, refiners will remain a play just on the valuation comfort, the type of replacement cost kind of adjustment valuation play they are sitting on, and it will be a function of cyclicality of how the crude oil prices behave, which to my mind is difficult to have a better upside, but at the same time you can have small downsides playing out. Coming to the last segment, that is food. I think food, you have a very limited play out there on the table to play out. Maybe some rice companies like say Chamala Setia or KRBL or LT Foods, which are basmati rice exporting companies majorly. So there you have some play out there, and this is not to do with the budget. This I'm talking about the type of weather play we are having. This likely to be a drought like a situation. Then the production, the output will be less this year around. What this will do, this will push up the prices currently in the market and in the export market as well. And there's a aging period for basmati rice, 9 to 12 months kind of aging period is required. So they are sitting on a lot of inventory where they will have this inventory windfall again playing out for them. So that's a good trigger out there for these companies. And eventually when the prices rise, the pass on will be there in the international market as well. So I think as a basket, you can play the rice, LT Foods, KRBL and Chamana Setia for a trading play for next 3 to 6 months.
Next 3 to 6 months, stocks like KRBL, LT Foods could be on the radar due to the kind of triggers that are in the offing for the entire food space. Let's break it down a little further, sir. You did talk about how fertilizers have already had the best of the run-up in the recent past, and that was on the hopes that perhaps there will be a big relief on GST. Now that has been referred to a group of ministers and nothing has come in so far, the other hope is with the budget, and there is an expectation that the government could be planning to expand the use of nano urea urea and nano-diammonium phosphate across agroclimate zones, as was mentioned by the finance minister in the interim budget as well. Do you think companies focused within the urea space specifically stand to gain if something like this happens? Should one be focused on that space? Is this a top agenda for the government?
Yeah, definitely, yes. I mean, any water soluble kind of fertilizer is more required, and narrow tap play is there out to be played out for. But again, the problem is the valuation. Most of the companies who are into that segment, and I mean, I cannot talk about my group companies. So they have already seen a quite, good built up out there. But if you are looking for a long-term play, say 3 to 5 years, it's definitely a theme to be played out and be invested into.
Okay. And again, so within the fertilizers and chemical space, where do you see valuation comfort at this point in time for someone who has missed the recent best of the rally unfold, and for someone looking at the long term from current levels? Where should one be really keeping their focus within the fertilizers and the chemicals pack? Whether this expectation comes true in the union budget, we do not know. Whether the GST relief also comes in after the GOM really decides on so is again something in the offing. But where do you see valuation and fundamental comfort right now for investors to keep an eye out on within the fertilizer pack?
See, between the two, I think chemical has a better valuation comfort, but again, it's a very diversified and very big field, because these chemical companies getting to a specific kind of a chemical. It can be specialty chemical, it can be simple generic chemical play, or agrochemical play. So depending upon the type of theme you pick up. But going by the recent kind of, a bit of a positive sentiments building around the chemical space, and since most of the countries in Europe has already taken an interest cut, and that is where most of our chemical producers supply the chemical to. So some hope is building out there. Maybe in next 2 to 3 months, things may start looking up for chemical space. And there, I think the players are better off than pure, fertilizer play, because fertilizer is restricted to a particular farm field. But as a chemical, if you are entering into a diversified company, for example, a UPL, which is again, which is a specialty chemical, agrochemical, and chemical play built into the same company. So that gives you a variety of a mix to play out for. Those are looking more attractive. Navin fluorine is another case in point, which is looking very attractive at current levels. Because my own senses with ECB cutting rates, Switzerland cutting rates, Swedish bank cutting rate, and probably UK has already hit a 2% inflation target. So post the general elections out there, the Bank of England should also be in line to cut interest rates. So some stimulus will come through. China, on the other hand, has stopped, major chemical production, and they have now the chemical, importers from India. So India are now exporting most of the chemical company. If you talk to the Gujarat-based companies, they are now exporting even to China. So there's one space where a lot of opportunities are opening up. So I think that's a better play. And Sakshi, one thing has to be kept in mind as far as fertilizers are concerned. You need a good moisture content in the soil for these fertilizers to be useful, to be, get absorbed into the soil. Unless rainfall actually picks up, it would then fertilizer will make no sense. Even if, I mean, drying on a dry land, fertilizer doesn't make any sense. So there has to be a good rainfall first. So that's a play which is still not closed as of now.
Okay, let's also discuss a bit of the fuel subsidy, and how should we be really looking at the fuel sector in the offing. Of course, within the GST meet that just went by, there was again hopes rising that probably petrol and diesel should also come under the fold of GST, but then the finance minister clearly talked about how the centre is ready, but the ball is in the states court, and that is again going to be a passing the parcel kind of a game. We do not know whether something like that will be agreed upon by the states, because they tend to lose a large part of the revenue if something like this happens. But when it comes to be the subsidy part, the fuel subsidy is still set at around 11,925 odd crore rupees. It's roughly the same as the revised estimate for FY24 as well, but higher than the initial estimates of the previous year. So there is some kind of an uptake, largely due to the cooking gas subsidy that was increased to about 300 rupees per cylinder of late. And where do you see the fuel subsidy and such discussions around fuel really going to be impacting the stocks within this fold, sir?
I think it will be largely again into the cooking gas kind of a play because natural gas prices have not gone up internationally. So there's a comfort out there. When initially it was set up, the natural gas prices were very high, and that also comes into the play as far as fertilizer production is concerned because natural gas reacts with ammonia to produce urea. So that thing is there, but thankfully that is still under the controllable limits. But cooking gas is something where further subsidy can come through as you boost rural area income or give some money, more money into the hand of rural people. That is irrespective of how the monsoon plays out because I think that would be more of a social measure. It's just a subsidy which is being passed on to the people to increase the per capita income in their hands. So refiners and all won't be impacted by this at all because eventually they get paid by the government of India. Initially, just the cash flow thing matters out there. Coming to the other play, based on all these subsidies getting into the hand of the rural India, whether FMCG is looking great or not, I don't think so. Because FMCG, if you look at the input prices, they have already started rising. Most of, input prices are already up, be it, personal care or even the food plays like all the biscuit makers, bread makers, all those input, wheat prices are up, rice prices are up, the vegetable prices are going up everywhere. So FMCG would not be a right play to, get into just on the basis of boost to the rural income through the subsidy route.
Right. Coming to the farm sector and the food sector particularly, now as far as the farm organizations and experts are concerned, they recently met the finance minister on June 21st as well. And they are pushing for increased investment within the agricultural research, rationalization of the fertilizers and food subsidies are concerned. The 2.5-hour meeting, in fact, that witnessed calls for raising of the Indian Council of Agricultural Research budget from 9,500 crore rupees to over 20,000 crore rupees. That's an expectation of doubling the kind of budget allocation is concerned for this as well. Within the food space and the agri space, where do you think is the fair expectation and what can agri, of course we've seen the first clarion call came in from the Prime Minister right after he took oath, and that was the direct benefit to farmers that he extended under PM Kisan. So there is a clear idea that the government is focused on the farm space and there could be a continued focus on the schemes that they have been developing. But what could be a fair ask, and within that, within the entire agri space, which are the key stocks that you would advise investors to keep an eye out on?
Sakshi, government has already started doing this because if you look at the MSPs of 14 crops has already been raised, and there is a further demand for increasing the MSPs further high. That is what each of the state ministers presented to the government. So any increase in the MSP will definitely directly benefit the farmers out there. But at the same time, you need produce to match the entire quantity. So my own sense is this play is still on. This interplay will take some time to have a clarity. And the other bigger problem is in the listed space. You don't have a very clear, direct food plays or, farm produce plays, which is directly linked to you have all indirect plays. And the indirect plays is more through the consumption route rather than through the producers route. So consumption route is all FMCG companies like Daawar, HUL, Nestle, Britannia, Marico, Adani Wilmar and all, they all come into the play. So these are all indirect plays, and these all companies are going to be hurt just on their input prices because they procure from the farmers to get their end product and produce. At the same time, this leading to an increase in farmers' income is again questionable to my mind. Because I don't see it playing it out that way because inflation, even a farmer may be producing one single product, but he has to buy other products from the market for his own household. So that balancing act is there. So like 5-7%, the MSP price was increased on an average for 14 cereals. So that's actually where the inflation is right now. So it's more of an inflation adjustment rather than increasing the per capita income out there. So it's a very, very evenly balanced, and maybe some, fisheries companies like into the water base and things there, the companies are there. But if you look, say, for example, Jari irrigation system, Again, it caters to the farm segment. But if you look at the valuation multiples and the history of these companies for the last 10, 12 years, it puts you in a very precarious situation to take a call as an investment bet on them. At best, they can be a trading place for the event, and post that you can always book your profits.
What about the sugar space, sir? Within the agri space, is sugar an interesting play then? Do you think that could be in the focus in the upcoming budget with respect to ethanol blending? Could there be a further advancement with the government's focus here?
See, I mean, the last statement which came from the government was that the trajectory of 20% blending over next 2, 3 years is on course. There was no change out there. At the same time, there was no additional information that blending may increase further. So that looks evenly balanced. As far as India is concerned, we are always a sugar surplus country. And there was a noise being made in between that worldwide there may be some deficiency of sugar because Brazil's second season is not going so well. At the same time, there has been some floods in Russia which destroyed the crop out there. So these are the two other major countries where you can have a good sugar coming to play. So having that in regard, there was a spike up trade which happened in the sugar stocks. But the baseline is the annual consumption is not increasing even by 1% as far as the volumes of sugar consumption in India is concerned. And the direct consumption of sugar is going to decrease over a period of time as one becomes more health conscious. The blending is another way out where you have a outlet out there, but that is again subject to many uncertainties of the future, like EVs are picking up in a good way, especially in the two-wheeler and the the delivery vehicle segment. It's all electric vehicles now. So that part of fuel consumption has already been taken out of the window. And then you have hydrogen play coming out. So by the time you can have 20% kind of ethanol blending for next 3 years time frame target, by that time you will have also hydrogen coming into a big play. So this entire play has to be seen from a very large, a period where I think you may still get 20% kind of a blending, but it will not be much beneficial for the sugar producer companies, I mean the millers. At the same time, it's very politically sensitive kind of a thing, and any dryness or any lesser sugar production out there, farmers will again get the benefit through a higher MSP prices of sugar.
Okay, well, fair enough. On that note, thank you so much, Dharmesh ji, for being with us and helping our viewers really understand what could be in the offing when it comes to the entire welfare schemes, also within the food, fertilizers and the fuel subsidies. What can we be expecting and whether these stocks should be looked at right ahead of the budget? You clearly said that there could be some kind of a trading opportunity, but one needs to really find out what really happens in the budget, in the main event, to really see whether there is an actual benefit that will translate into all of these stocks, because most of them are proxy plays and no direct plays when it comes to food as well. You've talked about too, and most of the run-up has already happened in the fertilizer space. All of those points taken well noted, sir. Thank you so much for being with us on this very special edition. Truly appreciate your presence with us. With that, viewers, we wrap up this very special edition for you. Remember, we will continue to run this series on India-nomics and budget stocks that you need to keep an eye out on up until the budget, so that we can cater to all the key sectors and what are top market experts really saying about those sectors and whether there could be a pre-budget rally in all of those as well. So stay tuned and keep watching Business Today Television, 12 noon. I'll be back with daily calls that addresses all your stock-related queries, so stay tuned in.
You've had an important meeting with the finance minister today. What are the kind of suggestions that you have put forth and how do you see government taking them?
देखिए, हमने उनको सजेशन दिया है एज अ PhD चैम्बर ऑफ कॉमर्स कि मैन्युफैक्चरिंग सेक्टर को बढ़ाना चाहिए. उसको 1% अगर एवरी ईयर बनाएंगे तो 2035 तक 25%